So now we settle up. I'm going to take this information, turn it on its side, and you're going to look at a bar graph. Looks like this. So the average actual margin for that period, the previous slide, was $9.38. The average expected margin guarantee for that period was $13.22. And the loss payment would be the difference, which is about $4 times the number of hundredweight that I had enrolled. Keep in mind, I did that calculation as having the same amount of milk enrolled each month. The numbers would be different if I varied it month by month. That's an option you have, but for these I tried to keep it simple. So here was the guarantee, here was the actual. And as we look across each enrollment period, this was the August enrollment period that actually started in October. Keep in mind the enrollment month, and then there's a waiting period. But for each enrollment period, clear up through March 2010, which would have reached out to February 2011, following that simple scenario, there would have been a loss payment check. The actual got above the guarantee, and that's still wonderful because you're making money, more money on that. Again, this is all at zero deductible. If you can see the impact what that would make if I had a $1 deductible, that would bring that down $1. $2 deductible would bring me down $2. So I would have had $11 guarantee against $9.38 actual for about a dime on $2. If you put that out and chart it similar to the first chart, here was the first enrollment period that we looked at. Enrolled in August, coverage started in October, and here is the actual. Remember, the actual was higher than the guarantee the first couple months. And then the expected margin, the guarantee, actually was increasing, as you saw in the previous chart. What I'd like you to keep in mind here is if you enrolled back in August with coverage starting in October, and I said, hey, this thing gets kind of ugly, I better look at this. And so down here on by February, I said, I better get in this, actually December, starting in February. And notice the best I can get, where you had a $13 guarantee, I'm coming in at a $9. The market signals already were pretty clear that this thing's going down. So here is the actual, the yellow line. The others are the 10-month enrollment periods, each month as we go through. Here is where the actual got well above what the guarantees were, and that was good. The milk checks looked really nice. And then here is the most recent month, looking ahead 10. You'll notice from here they start, and there were some were going up below, and we don't know where these are going. But that kind of, you can see the trend of kind of where the pricing was. For each month, you'd have a similar chart just moving over. September would start with November. And again, there's the guarantees, and when we get through the period, you have what the actuals were and the difference.